If you want to save money on your taxes, you need to know what information to give your tax preparer.
Welcome back, everybody. Today is the day, 1 week out from the live event out here where we're going to show you the path to follow to make it through this storm that's upon us. You know, I wanted to get kicked off because I want to show you a white paper. So this is a white paper we subscribe to right here. This is Rodney's take, but I'm going to read this to you. This is something I covered in What the F Happened today, but it was very important. It said, when the Fed started printing gobs of cash in 2009, everybody worried that those new dollars entering the economy would create runaway inflation. But the Fed had a plan. The central bank used its newfound power, notice that, newfound power, to pay interest on excessive reserves, IOER. Now, today, it's just interest on reserve balances, or IORB. I know this stuff doesn't make any sense, but hear me out. Let me continue. This was done to convince banks to hold cash, to hold extra deposits, because they didn't want the banks to convert those deposits into loans to consumers and businesses that need the money. The Fed did not want banks to lend to you and your business. The Fed wanted them to just sit on it. Trillions of dollars to date, $3 trillion sitting in excess at your local bank. Well, not just yours, but all the US banks, $3 trillion. Think about that. They only printed 5.1, and 3 trillion of the 5.1 or something close to that is sitting idle at the banks. Do you know why? Let me tell you why. When the Fed funds rates was at zero. You remember not long ago during the pandemic, the Fed funds rates was zero, okay? And to 0.25%, hardly worth talking about. That wasn't much of an issue. Banks weren't really making any money on that money because Fed funds rate is what the banks make on that excessive money just sitting there. Banks pay depositors how much? I mean, can anyone in the chat tell me how much the bank's paying you right now? What do we got? 0.25%, Jim Collins. Okay, he's a high roller. So Jim Collins, 0.25, get like 42 cents a year. That's probably on about $2 million. That'd be about right. What else we got? What's your bank paying you? Most people probably are saying nothing. My bank isn't paying me anything. My bank that I'm at right now pays me zero. I mean, probably because I don't keep any damn money in their bank because I created my own bank. Surprise, surprise. But let's get into this because this is going to piss all of you off. And I thought this was a really great way to start because this is going to solidify everything you need to understand. And this is why you must take back control of your money. There is no longer an option. You got to start thinking like a bank. You got to start acting like a bank. You got to start mimicking what the banks do, because I'm going to tell you something. If you don't change soon, what I'm going to tell you next is going to change everything in your future if you're keeping money at the bank. So today, banks have more than $3 trillion on deposit at the Fed, where they're earning about 1.65%, and yet they're still paying depositors 0.01%. That's the average, 0.01%. If you're a high roller, it's 0.02%. Now that would be like somebody that has millions of dollars that just sits at a bank. I can't understand why you'd ever do that if that's all you're making is 0.02%. But that's right in line with what some of you were just putting up there, okay? So I want you to think about that. The bank is making 1.65%. They're paying you 0.01 or 0.02% if you're a high roller. JP Morgan Chase issued a new rate sheet on Friday, July 15th, which shows the bank pays basic savers 0.01. And then it goes on to say super special relationship clients who deposit more than $1 million are paid a bit more at 0.02. Banks are earning a net margin, or a net interest margin. A spread is basically what we call this, but they call it a net interest margin of more than 1.5%. And they don't have to make that lending it to you. They don't have to make that doing anything, because the Fed said, hey, we created a big problem here, guys. We printed too much money and we created a problem. It's called inflation, and people are pissed. They go to the grocery store and they can't buy many groceries. They used to get 6, now they get 3 bags. They can't eat. Kids are hungry. You got to stop this shit. Sorry, we printed too much, so we don't want you to lend it. We just want you to hold it. No, actually give it to us, and we'll just pay you a higher interest rate on that money. And as we keep raising interest rates, you guys are going to make more money. And yeah, but then that translates. So that's the banks talking with the Fed, right? Don't put that money in the street. Don't lend that money out. Slow the economy down. We can't keep putting all this money we printed into the hands of the consumers because they go out and they spend it and they buy shit. And it drives the price of everything up. And holy crap, man, we got to tame this beast of inflation. So they're doing nothing, and they're about to earn a lot more because every time they raise Fed funds rates, the banks are getting a raise. And you are not, because for some reason, the banks aren't increasing the amount you're making. See, this is where the difference comes into me. And I'm hoping this changes, but let's take it back to 1979, okay? 1980, 81, 82, hyperinflation time. So during that period of time, the price of everything went up because interest rates went up. But you know what else went up? The amount that savers made on the money sitting in the banks. You all remember that? Yes, you know, mortgage rates were 14.25%, but you were making 10. I know it's all relative. I mean, it's still, you're not keeping up with things, but still, at least you felt warm and fuzzy. You felt like you were getting something for the money you kept at the bank. 2022, the banks don't need your money. Matter of fact, they don't want your money. They don't want it at all. You can't even walk. I just walked into a bank. I walked into Key Bank the other day. Did you know those sons of bitches took away the dum-dum suckers? They're so cheap, they don't even give us dum-dum suckers anymore. Imagine that. No coffee anymore, no dum-dum suckers, and they don't want our money because the Fed gave them all the money. They're then paying them a spread on that money, and they said, don't lend it out. So as you kind of get into this whole thing, I'm not going to read the whole thing, but you have to understand something right now. The banks aren't your friends. The banks aren't there to help you, and we got to change something. We got to change something really fast, because if you're okay with that, there's something wrong with you. You shouldn't be okay with that. You shouldn't be okay that the Fed just pays them an interest rate to sit on money, which doesn't help anyone's business, doesn't help anybody with anything because they're not lending the money out. They're just sitting there. And why? I guess you got to side with the bank. Why would the bank lend money? To lend money out takes staff, it takes work, it takes energy, right? And there's some risk because if that loan goes bad, then they got to go to collections. They got to do this whole thing. And, you know, hey, they could lose money. It's not their money. It's your money anyway. But still, I mean, hey, they're on the hook, sort of. Now, they don't have to lend any money out. They just sit on it. They give it to the Fed. The Fed pays them an interest rate, and they make boatloads of cash. So when people compare what this storm's going to look like to 2008, I said, no, no, no. In 2008, banks were in trouble. Today, banks aren't in trouble. They got tons of money. This crash is not going to be from banks. This crash is going to be because of debt. This crash is going to come from geopolitical problems, tensions overseas, and China. It's going to come from a lot of other things because it is the end of the long-term debt cycle. We've never seen this in our lifetime. Never once have we seen what we're about to see. Because the last time it happened is 1933, and it's happening now. I don't know what it's going to look like. I can tell you this, when you go on here and you read what this guy, JP Morgan Chase's chairman, the CEO, okay, Jamie Dimon, I think I said that right, has been sour on the economy for some time. He expects things to get ugly in the near future and is positioning the banking giant to withstand the downturn. This is the CEO of JP Morgan. And in the latest JP Morgan earnings report, after noting that lending was doing okay, but trading and underwriting had suffered, the company informed investors that it had suspended stock buybacks to further build its cash position against the calamities ahead. That makes sense, but does Dimon really need to worry about business? This is a white paper here. After all, Chair Powell and the other bankers at the Fed Reserve have his back. It's all about printed money, folks. The thing you all really need to look at and you need to prepare for is the fact that the Fed is going to destroy the economy. You know, it'd be like, you know, you're on a battlefield and there's that one big thing. You guys all seen the movie Troy, right? Remember Brad Pitt with that big giant guy? I wish I could just play this for you. If you remember the scene, he rolls up, you know, just starts running at this big giant. Giant throws a spear at him, dodges it. You know, no big deal, like a fly. Dodges it and then runs up and just stabs him in the throat and then walks away. You know who that Troy guy is? The Fed. That sword stab, that's the economy and the stock market. They're going to destroy it. They're going to destroy it and they're going to say, we had to help you. Inflation was destroying this country. Inflation was destroying, the average person, they couldn't even afford to buy groceries. They couldn't afford to buy gas. They couldn't afford to buy anything. We had to do this. The best part about this whole thing, you can all become extremely wealthy. When the Fed does that Troy dancing jump with the sword and kills everything, you're going to be on the winning side. You'll be like, yeah, I knew this was coming. Yeah. Saw it happening. I'm just going to mimic what the banks do. And I'm just literally going to go out and I'm going to become filthy rich because nobody else listened. But I was on this stupid thing called Wealth Webinar and they read this dumb white paper. It was boring at first, but then I'm like, yeah, actually, you know what? I should become the bank. We got a guest on here that's going to be speaking at the event in July, which is just next week, just so you all know, July 30th and the 31st. Mr. Devin Burr, TikTok extraordinaire. I'm going to give him the pin real quick because I want him to talk to you a little bit about when he had this epiphany moment of becoming the bank and what that's done to his life now, and then what he's going to be doing when this whole thing goes down.
Well, Chris, thank you. I don't know how I follow that energy, that passion, that enthusiasm. But yeah, guys, it's something where once you learn about this stuff, it almost pisses you off that you didn't know about it sooner. Like I learned about it 2 years ago. I was 34, just turned 35 years old. And I only can imagine if I would have known about this when I was 24, 25 years old, just the difference I'd be in life and where my money would be and everything. But I basically, I come from a background that's, not silver spoon. I didn't have a lot of privileges. I come from a lower middle class family, 7 siblings. So got hand-me-downs, heard that we couldn't afford that. Money doesn't grow on trees. Like wasn't taught anything about money. Barely graduated high school, stumbled through my 20s, had at least 50 jobs. And by 31 years old, I was, by all accounts, a failure. Was bankrupt, had $300 to my name, couldn't afford the apartment I was living in with my daughter. Literally could not afford the apartment I was living in. So I had to move in with a friend, could barely afford the rent to the friend, got my heart ripped out of my chest by the girl I thought was going to be the one for me. I was 31 years old at rock bottom. And realistically, I deserved it because I never worked on myself. I never worked on being a better version of myself. So I started working on me. I started reading books. I started, watching YouTube videos, started listening to podcasts, started filling my mind with useful information. And as I started to work on me, everything around me started getting better. I met my wife, Danielle. We've been married now for 3.5 years. I started making more money at work. I started maxing out my 401k, doing all the things that I was taught successful people do. When you make more money at work, do you pay more or less taxes? You pay more. Bracket creep. When you max out your 401k, mind you, I was maxing out my 401k. It was like a goal of mine to max it out the first quarter. So I would put like 40 to 50% of my check to my 401k, because then in my thought process was, but then the rest of the year, since it's already maxed out, I'm going to be making so much money because that money's not going to my 401k anymore. I was giving up control of my money today when it's worth the most, to have access to it later when it's worth less because of inflation, not paying taxes now to pay them in the future when they're going to be higher. But it's what we're taught. It's what we're taught successful people do with money. I started putting money in the bank. Had never put money in the bank. I literally would make money, spend it, make money, spend it, make money, spend it. I started saving money, putting it in the bank, making 0.05% on the money, while the bank takes it and makes 400 to 1,300%. I was doing what successful people do. So I remember I got to a point where it didn't make sense anymore. It was October 8th of 2019. I had become successful and I knew there was something more for me. So I walked into my job and I resigned October 8th of 2019. I bet on myself. I became a full-time real estate investor and fell flat on my face, didn't make any money. Almost 3 months goes by, didn't make one penny. I was this close to going back to my comfortable, successful job. I'll never forget my mentor at the time, Templeton Walker. He tells me, dude, you're not going back. You're not going back. Like, you're a people person. Get where people are at. Go to meetups. Start talking to people. Be yourself. Be the social butterfly that you are, and you'll start getting deals. January 13th, 2020, I got my first real estate deal. It was a wholesale deal. I have a picture of me holding the check, smile from ear to ear. You'd think it was $1 million check. Nothing close. But it wasn't about the amount of money. It was the fact that I could create the money without having to be an employee. So I went on a tear from January till March. I did 8 real estate deals with 0 marketing dollars. And then COVID hits. Meetups went away. No more meetups. I'm like, well, what am I going to do now? So I start reading books again. I start watching YouTube. I start listening to podcasts. And I heard Chris on a podcast. It was a real estate podcast that I was listening to at the time. It was Real Estate Disruptors. And my mind was blown. I was like, this is incredible. Before real estate, I was a mortgage banker. So I understood compound interest, simple interest, how when you do a 30-year loan, you pay a ton of interest to the bank. If you do a 15, you pay less. It was all about the velocity of the money. So I understood that. I got on a call with Chris, very skeptical, probably one of the most skeptical people you'll ever meet. Did a real small policy, tried it out. So it was $6,000. I put it in. 2 days later, took out like $5,100, lent that $5,100 to someone at 15% interest. So they're paying me back interest payments while the $6,000 was still compounding. I was like, boom, this is incredible. Got 2 more big policies right after, one on me, one on my wife. Started doing all my real estate. I was multiplying money. I have a deal where I made money 5 times on the one transaction because I used a policy. Never forget, I called Chris or texted him or something. And I'm like, dude, you'd be so proud of me. I figured out a way to make money 5 times on one transaction. And it was a text message, actually. Chris, do you remember this? I text you and I was like, I figured out how to make money 5 times on one transaction. I thought he would have texted me back like, that's incredible, great job. Calls me within like 2 or 3 minutes. He's like, shut the fuck up.
About exactly what I said.
How did you do that? I've only been able to figure out how to make money twice. You figured out how to make money 5 times. How did you do it? So I explained it to him over the phone. He's like, it's incredible. We have to get you on a case study and you have to talk about that. So I got on a case study. This was maybe, gosh, when was that, Chris? October, November of 2020, something like that.
Yeah, that's probably about right.
And
Had to have been because that would have been about right.
That's really when it started. Is like, I just started telling everybody about it. I'm like, Mom and Dad, you got to learn about uninterrupted compound interest. Brothers and sisters, you guys got to learn about the 8th wonder of the world, compound interest. I'm telling friends, I'm telling family. I literally have a time where I told someone at the checkout line in the supermarket, I'm looking at them, I'm like, hey, you know all that food you got there? You could actually get all the money back for all that food that you ever buy and eat. You know that, right? Here's how it works. I was telling everybody, and everyone's looking at me like I'm some crazy person, but I just felt like if I could do it, anyone could do it. Again, barely passed high school, stumbled through my 20s, 31 years old. I'm a failure. So I'm thinking, if I can do it, it's not that difficult. Anybody can do it. And that's when I got on TikTok and just started making videos, and it got crazy. There was a time where I was sending probably 10, 15, 20 people a day over to Chris. The good old days, right, Chris?
Yeah.
And I'm sitting in my backyard and it hits me. I'm like, this is stupid. Why am I just sending Chris all this business? So I called Chris and I was like, hey, so I got like another 10, 15 people for you. He's probably thinking, and I just asked him, like, is there a way we can both benefit from this? And he's like, yeah, just get licensed and you can hang your license with the team and you explain the policies, you set them up, you get paid for them. So that was March of last year, 2021. I got licensed and just kept doing what I was doing, kept making videos on TikTok, kept explaining how I'm using policies, showing illustrations, my actual illustrations, writing stuff out on a board and showing how I move the money. And then just telling people, if you want to learn more, check out the infinite banking link in my bio. It's been crazy. The last year, I've set up over 700 policies. One of the top producers at Lafayette Life and One America. 2 years ago, I didn't know this existed. This has been a godsend for me. And now I just try to share it with as many people as possible because I know, again, they can change my life. It can change anybody's life. And who am I to hoard that information? You know what I mean? So that's kind of my story in a nutshell.
Awesome. Well, a couple questions just came in. So if you don't mind, let's just answer them. Did your family listen to you and do it? This is a good story. He said, mine still thinks I'm nuts.
Hell no. They did not listen to me until I could show them proof. Like at first I was like, this is incredible. Here's how it works. And they're just like, okay. So I can always tell when someone doesn't want to talk about it because they get this glazed over look in their eyes and they change the subject really quick. And it's like, why would you change the subject? I'm literally giving you a cheat code to life, a financial cheat code. Why would you change the subject? So that happened over and over and over again. But then once I could actually show proof and show how I'm using policies, I started telling my mom, got my mom set up with a policy. Other family members are starting to listen and starting to pay attention to it now because they're seeing what I'm doing with it and that it's real. It's not too good to be true like a lot of people think.
Well, for the record, my wife doesn't still listen to me until she saw Devin's Instagram videos and she's like, oh, now I get what you do. So
that's a slap in the face right there, isn't it? Well, here's an interesting thing. Like when you talk about family and, Anonymous was asking that question, so I don't know your name, but, the hardest thing, as you all know, Devin's been doing this, a little over 2 years. Stephen, what are you at, Stephen? 4 now? Or is it
no, like 3 years.
3 years.
Yes, in the infinite banking space, yeah.
And I've been doing this really since 2014. And you know what? I talked to my family about this. I even, during one of the family parties, I tested something because I never get traction with my family. So I tested something out and I had, like on the TV, they had one of those smart ones and I put the video on YouTube up. And it was just like the short little video. And I played it and they all watched it. And I'm like, I'm sitting there. I'm like, I got him. I got him this time. And they were just all like, oh, and then went nothing. I do business with 0 of my family members. And it's not because I don't want to. I mean, of course, we all want to help our families. I do business with none of them. None of them come to me. Matter of fact, my one aunt, well, whatever you call it, on Larissa's side, my one aunt sent me a text message one day saying, hey, Chris, I'm buying life insurance. Can you review this whole life policy that the advisor referred or showed me? Can any of you imagine like how I felt? I'm just like, and it was her house, just so you know, it was her house that I played that video. I literally felt this big. I felt like worthless. I felt like, holy crap, I have completely failed. But listen, like if you're trying to do business with your family, stop. If you're trying to do business with your friends, stop. If you're trying to help your friends and your family understand this, point them to the video. And if they don't get it, just be like, you're lost. You're lost. I can't believe you didn't understand that. Because it is their loss, folks. I don't know how to say it. Like, I'm going to expand my horizons a little and say this because you know what? I'm just done with it. This event that we're doing next week, the 30th and the 31st, will be the last event ever done in Buffalo unless it's one of the small little events at my house. Period. I'm on the record. I'm recording. This is done. Sean is taking notes. She already knows. The last one. Do you know why? I live here. I did a TV show for HGTV here. I was all over the news, me and my wife. Nobody here takes me serious. Nobody here, except for a couple, and there are a couple that are just phenomenal here. But for the most part, like out of the almost 1 million people in Buffalo, I don't exist. I'm a nothing. I don't even like show up on the radar screen. And the reason I'm saying this is, folks, sometimes you just got to get out of your backyard. I know it's comfortable. I know you know where every little divot is, where every flower is, you know where everything is in your backyard, but until you get out of your backyard, nothing's ever going to change. Like, I love getting out of Buffalo and going other places because that's the place where I can change people's lives. I can't explain it. I don't know what the reasoning is, but that's the fact.
That's so true, because when I learned about this stuff, it was March of 2020. I immersed myself in it. I was reading books. I was watching YouTube videos. I was listening to podcasts. I was researching on my phone till like 2 a.m. My wife would wake up and be like, "What are you doing?" I'm like, "I'm learning about this thing that's going to change our lives. Go back to bed." So I was learning about it. And then I started telling people, right? It was everyone around me that I was telling. And this was from when I got my first policy, basically. So May until December. So that's what, 7 months. I'm just telling everybody around me, friends, family, neighbors, people in checkout lines at the supermarket, in passing, anyone I could tell I was telling. How many policies do you think I set up out of that? 0. I wasn't licensed, but I sent them over to Chris, and I guarantee I probably sent in that time frame maybe 5 people. I guarantee none of them did it.
Yeah.
Wasn't until I got on TikTok where I started making videos and I cast a really big net where I could help a lot of people. But it took that really big net in order to help a lot of people. Like, I've got 762,000, I think, as of today. 762,000 followers. I've set up, as of today, 739 policies. So that's less than 0.01% of my followers that I've set up. And I talk about this stuff all the time. So in order to help people and change people's minds, you have to be able to get out to a lot of people. And unfortunately, if only 0.01% of people listen to you, you're not going to set up a lot of policies or change a lot of people's minds in your immediate vicinity.
No, you're absolutely correct. And you know what? It's like, you know, I was an advisor for 16 years. Every one of my clients was in this area, and I worked very hard for those. It's a very strange dynamic. Most people never get out of their backyard because that's just where your network is. That's where your comfort zone is. You know where the restaurants are. You got friends. You can ask them to go out. If you just changed, you know, we always talk about changing one thing, that's where your money goes first. But like in business, if you just change one thing and that's where you do business, and you stop trying to do business in your backyard and you just go one state over, okay? Watch what happens. Watch. It's a totally different dynamic. And we got Spencer, who, you know, is just a master of disaster when it comes to crypto, Bitcoin, Ethereum, all that stuff. And I bet you he'd say the same thing. Actually, I don't even know if Spencer has a place he lives. He's in Europe one day. He's in, I'm just making this up, but Ireland, and then he's all over the place. He doesn't have to be in one place. And I think if any of you are trying to do this, just because some questions came up, just expand your horizons out of your backyard. It will change everything. And, you know, our stories, if that doesn't resonate with you, like it will if you start trying to do this, because we have a lot of money mentors that come on and they go out and they do RIAs in their backyard. They do, you know, BNI things. Good luck. I don't understand it, but it's the best thing that ever happened when we actually decided we were going to get out of our backyard and start doing this. We do it. We help people in every single state in this country, and we do almost zero marketing in my backyard for that very reason. I don't know if it's just Buffalo, but the other thing I want to point out is somebody was asking, you know, when are we going to start doing stuff in Texas? The second you ask us to, the second you invite us down there, the second you have an event for us to speak at, we will be there. I won't even ask what's for dinner. I'll just show up. Hey, if there's dinner, great. If not, No big deal. I'm a vegetarian. I go out and eat some grass. All good. Just get us out to your backyard if you want us to help your friends, your folks learn how this can change their life. Devin, man, thanks. I can't wait to see you next week. And hopefully we're going to be able to change. I mean, we got a sold out event. I don't know if any of you know that. The in-person part of the event is sold out. We have 2 VIP tickets available. So right here, folks, I'm just going to show the screen. 2 VIP tickets available. So, and the VIP ticket is Friday night, 29th. We're taking a limo downtown Buffalo, and downtown Buffalo is awesome. We rented out, Shauna rented out a suite at the ball field, so the baseball field. So we got a 50s themed diner, kind of suite, and we're going to hang out there. It's a very small, intimate group, but there are going to be all the speakers there. Dan Clark, who is a world famous speaker, is going to be there. Troy Hoffman has built a $100 million+ company and several of them. He's going to be there. Devin and everybody else. So like, you want one-on-one time? You know, everybody's always like, oh, how do I work with you one-on-one? Devin's probably hears this every day on TikTok, you know, after the haters beat him up. But how do I work with you one-on-one? You just show up, man. Buy the ticket, get the plane ticket, and show up. And we will be there all night, cocktail in hand or no cocktail, whichever you prefer, talking to you about how you can change everything and how you can be ready for this storm. So Devin, thanks for everything, man. I appreciate it. Where are you at now?
Chris, I actually set down some roots for a time, and I'm in Las Vegas now.
Oh, very cool. Very well. I love Las Vegas. We're going to be there for some podcasts. We should get together and
Let's do it.
Be there and grab breakfast or something. So
the only problem with Vegas is there's no surfing.
No, there's not. There's not. There's a lot of crazy people and a lot of hot weather, and it is beautiful there, though. We have a big development that we raised money for over there that, you know, we just had a big breakthrough on recently. Cool. So I like Las Vegas. So I understand why you're there. I really do.
It's a good place.
So let me just sum this up. So Spencer Montgomery, many of you know him, some of you do not. Okay, he's I don't know what the word would be. I'm not going to say prophet, but he is one of the best when it comes to crypto, specifically Bitcoin and Ethereum. And I wasn't a big Bitcoin person until I met Spencer, and I started learning from Spencer. I went through his entire course. I learned a lot. I read some books after that, and I got clarity on what this was. And today I built up a pretty decent, probably by Spencer's size, I'm like a micro, position, but I've got a decent position, in my opinion, in crypto. But my position in crypto wasn't bought when it was at 65. My on button started at about 24 and went down to about 16, and I bulked up heavily. I remember being out with Steven in California watching Bitcoin tumble, and we're in line at Starbucks. I'm on Coinbase as fast as I can, trying to just buy and buy and buy. And yeah, so that's what I've done, but it's all because of Spencer. And I just wanted to bring him on real quick. He is speaking next week at our event out here in Buffalo. So you're going to hear him, in person. Are you going to be here for the VIP event as well?
Yes. Yeah,
awesome. So you can hang out at the ball field in the suite with him as well. But let me just pin you up here. And I just want you to tell everybody a little bit about, because we have a lot of discussions offline about this stuff, but I just want you to talk a little bit about what's happening in that space. A lot of people, sorry, Spencer, I don't mean to steal the thunder for you, but there was so many gurus in your space. Dude, when Bitcoin and Ethereum and all of that stuff, when everything was up around 60, even 50s, even 40s, everybody was an expert. Like, that's all you heard about is, oh, do this, all this stuff. Now, today, it's fallen. I don't even think it's all that low today. We're at about 23, 24 on 1,000 on Bitcoin, but all the gurus are gone. You got these big hedge funds folding. You got these big, guru companies, these giant companies that put it all in it that are insolvent. So I'm just going to turn it over to you because you're the expert in this, and I got to learn.
Yeah, it's been interesting. I mean, it's just been a roller coaster. I was seen as like the old ancient boring guy because I was only pitching Bitcoin and Ethereum, and everybody's like, well, what about all these Doge coins and Shibas and DeFi coins and like Celsius? And it's like, listen, there's a lot of speculation and garbage out there. I know long-term, like I'm not here to play the 6-month, 3-month game. I'm here to play the next 10 years. And so because of that, that's why I have vehemently only spoken about Bitcoin and Ethereum. Yes, they've had a rough 7 months, but what asset hasn't had a rough 7 months or so? And Bitcoin is still very early. It's like a baby in terms of other assets. And so you are going to get more volatility. And I think that what's happened in the last 7 months has been super healthy long-term, right? Like the reason crypto has crashed so hard is because people were using leverage. They were using too much debt. It's the same thing that happened to real estate in 2008, right? And what I've heard from people is like, man, why would I ever touch crypto now? It's like, what if you said that about real estate back in 2008 of like, real estate is a terrible asset. You would have missed out on incredible opportunities over the last decade. And I think the exact same thing is setting up for these top cryptos today. That's the way that I think about it. There isn't regulation. There isn't regulation is coming in, but you didn't have the Federal Reserve coming in and saving these crypto banks or hedge funds like what happened in the great financial crisis, where the government came in and saved these financial organizations. That didn't happen in crypto. And so you got the bad actors flushed out. And again, for those bad actors getting flushed out, it forced selling. People had to sell their assets to get out of their situation. And that's what caused a lot of this downward price movement. But I feel personally that we have kind of gotten out of that, and we are now building a really strong foundation for the next run. What do you think, Chris?
I totally agree with that. I just actually pulled it up right now, and there's different levels, and people got really scared. Anything south of 20,000. Now we're at 20, 23, almost 24 here, and like I think like what you did is you flushed out a lot of the people that were just looking for the get rich quick. And now you've got a lot of the base, but the same thing happened in the .com crash. And this is, I know we've talked about this, like if you compare crypto, specifically Bitcoin, Ethereum to, the .com crash, like look at how many tech companies were on the Super Bowl back during, right before, like, let's say 1999 and 2000, there were tons of them. I bet you none of those companies exist today, but the big ones do. The Amazons, the Googles, like, can you imagine, like, if you went back and you looked at what those stocks were, they were nothing back then. And look at them today, they're behemoths. Well, like, if you really just kind of put Bitcoin and Ethereum in that same kind of trajectory, Mark Moss, I did an interview with him. It was wild for the Chris Naugle show. You all should watch it. He's a huge guy. He loves Bitcoin, loves it. But he talked about the same thing you did, this long-term approach. And it's funny that we talk about a long-term approach with investments as being like 10 years, because really it's a lot longer than that, but we're talking a 10-year sprint. Like, where is it going to be then? I mean, could it, I mean, if we're at 24 now, I mean, could it be 124? Could it be 524? Who knows where it's going to be? There's only an infinite number of it.
And the one thing that I have always preached is like, I'm not telling people that they have to go all in. It's like, let's start with just 1% of your assets. When you look at the opportunity here of something that realistically, I think Bitcoin has a realistic opportunity to go to $1 million in the next 10 years, that's a 40x increase from here. And so you take 1%. If you lose that 1%, that does literally nothing to your long-term perspective of your earning potential or for your retirement capabilities. But if it really does have a 40x opportunity, it going down 20, 40, 50%, that really is negligible in the long term. So you can play this really kind of scary game without it being scary for your finances. The people that make money in crypto, it shows this environment proves that people that do make money in crypto didn't just get lucky. You have to have built out an education and a conviction so that you can weather these storms and press the buy button like you did when everybody is running away, right? Like that stuff is hard. It's easy to buy crypto when it's running up from 20 to 60,000 and everybody's buying it. It's really hard to write it down and to hold on or to buy when literally it seems like it's just going to go to zero. It isn't actually, people aren't lucky when they make money in crypto. They're very, they did it the right way. They either had low conviction, they just made sure to do it smart and not put in a lot of too much money, or they just have the right convictions so they could weather the storm. So that's one thing that has been enlightening to me over the last year.
No, I think you're absolutely right. And, I think, you got a lot of the people out that are just fair weather shoppers, if you will. They only want to buy when it looks like it's going up and up and up. And those are the people that have lost all the money. And those are probably the gurus that were all over TikTok and everywhere else that are no longer on TikTok talking about that. They're talking about something else now. They're always jumping to the next best thing. Spencer, one thing I've always appreciated, and, in your track history with this goes a long way back, is you picked a lane and you stayed in that lane because you believed in that. And you invest in things like, and understand. You didn't just invest in things that like, and understand. You helped others invest in things that they then got to know, got to like, and got to understand. And that's the third law of wealth: protect your wealth. And the only way to do that is to understand it. And I'm so honored that you're going to be out here in Buffalo, July 29th, 30th, and the 31st, doing exactly that. Teaching people how to know, like, and understand this asset class, but more specifically, how to understand its trajectory in the future. Because, hey, listen, a lot of people are going to lose a lot of money. We've talked about this. This is going to be a doozy, but there's going to be an awful lot of new millionaires and existing millionaires that become billionaires. So I want everybody to think about that wherever you're at in the, the game of building wealth. Just imagine if you could 10x that game just by being prepared for what's coming, which will single-handedly, for most every single person on here, we got almost 80 people on here. For all 80 of you, this will be the biggest opportunity of your lifetime, if and only if you're ready for it. And it's going to take knowledge, it's going to take some mentorship, and it's going to take you getting in the driver's seat and stop saying, I wish I could, I shoulda, I coulda, I woulda.
Yeah, and I want to say, for those that are going to be at the VIP event or just the event, come, like, bug me with your questions. Like, I want to have the conversation. I'm there to have those conversations. I'm not. I want people to challenge me and to really, let's work through of why people should be putting some of your portfolio to work in this way. Like, again, I don't have a crystal ball. I can't say that I know for sure that Bitcoin's going to $1 million. I don't, but I do have strong conviction that there is a way that you can do this that is not going to, that will just set you up in a way that doesn't put you at risk, but still allows you to take advantage of what I think is going to be a really incredible opportunity. So let's have the conversation.
That's awesome, man. Spencer, thanks so much for jumping on today, and we cannot wait to see you next week. It's going to be a ton of fun.
Looking forward to it. Thanks, Chris.
It's going to be wild. How many of you on here right now have either just started to hear about what infinite banking is, or maybe you're brand new to this concept, you don't know anything about it? In the chat, can you put I or AYE? I just want to get a gauge. How many of you are brand new to this? Maybe you've heard about it. I know we have some agents on here too. Lawanda, she's licensed, but just wondering, like, because there's a big difference between somebody that hears it, watches the video, and then somebody that's doing it. And I want to break that down. You can hear about it. You can watch videos, you can kind of get, around the campfire and learn it, but there's a big difference between learning and kind of conceptualizing and then actually doing. And that's kind of what I want to talk about. So read Nelson Nash's book. So just so you all know, the infinite banking concept was founded and pioneered by the late R. Nelson Nash. And if you have not read the book, Becoming Your Own Banker, now is the time. That book, for some people, they're like, oh, it's a little older. The illustrations in there aren't what the illustrations are today. If that's what you're taking out of the book, you missed everything you should have learned in the book, because the book is not about the numbers. The book is not about the policy design. The book is not about the product. The book is about taking back the banking functions in your life through and through. That is it. And once you understand that, because that's why I opened with that whole thing about JP Morgan and the stuff that's going on with banks. Once you take back the banking functions in your life, everything changes. So we got some people kind of putting it up here. I've started my policy and my clients designed with 90-10. So we got some IBC Global folks, that's the only person out there that I really know of that's really pushing the 90-10s. But that's great. So we got the policy started there. So let's dive in. First thing I want you to all understand is I want you to understand just how a regular bank works. So if this is you take your money that you earn and you put it into your bank account. Okay. So we'll just call this your regular bank account. And I'm just going to use 1 to 2% just in all fairness, because some of you, bridge that north of $1 million. So you might be getting 2. The rest of you are probably around 1 or less. So you put the money in the bank. And the reason you put the money in the bank there is a couple things. Number one, that's what you've been told to do your whole life. Make money, deposit it in the bank. Make money, put it in the bank. Make money, put it in the bank. And if I were to ask you why you do that, you'd probably look at me with cross eyes and say, doesn't everybody? Or isn't that what we're supposed to do? Or what else am I going to do with it? But that's what you do. And then the bank that has your money takes that money and lends that money out. And we'll just say this is loan number 1. Okay. And it doesn't matter. I do this all the time in the videos, but they're paying you. And just for all intents and purposes, keep this simple. Let's just say 1. And let's say they loan that out at 5. The bank made 4% spread by making your hard-earned dollars work for them. So we all understand how a bank works, I think. And the bank just keeps doing this because when that loan gets put out, the money ends up going back in for the next person. They move it back out. And another loan 2, they might make a spread of 6% here. That person gets the money, puts the money back in. You've seen that. And at the end of the day, the bank makes $500 to $1,400 more than you do. So if this is how banks work, how do we just change one thing? How do we change the name on this bank? Okay, so if this is the bank, what if we just put your bank? What if it was really that simple? What if in order for you to become your own bank, all you had to do is literally change where your money goes first. And instead of putting it in their bank, Bank of America, JP Morgan, Chase, KeyBank, any of the banks out there, what if you just put it into a bank that actually had your name on the front door? Pretty easy, right? Oh, but I don't know. I don't know anything about how to start a bank. I got to buy the property. I got to convince people to give deposits. No. What if we just start a bank where it's just your money, your family's wealth? Think Rockefellers, think Rothschilds, right? Their family bank. They controlled all the money in their family. And every generation, their bank got bigger and bigger. Well, you probably never even thought about how that happened. Well, it's because they controlled it all. So when you change that, first off, we can erase this, okay? Your bank doesn't pay you 1 or 2%. Right now, your bank pays you 5 to 6%, of which for most carriers, and it fluctuates, can go to 3.75, can go as low as 2. It's kind of difficult nowadays, but let's just use 3 because it's a nice middle ground. That's your guarantee. I did say that word. It's not a swear word. I'm not going to get in trouble for saying it because your money is actually guaranteed. Okay. So now that your money is guaranteed and we know with dividends, we can make even a little bit more, up to 6%. Now we're way better than just putting money in somebody else's bank right from the get-go. But what if it got better? What if it got better? Because remember, this is good and great, but your money's got to sit there to earn this, right? Wrong. Your money doesn't ever have to sit there and never should. Your money has to work. Remember, I said what the bank does. The bank takes your money and sends it to work. Devin, do you ever leave your money sitting in your policies?
If I don't have somewhere for it to go, yes, but generally there's somewhere for it to go.
Yeah, we work pretty hard in Private Money Club. I mean, Devin's new to Private Money Club. Like it's his new toy in his toy box. Like with Private Money Club, there really is very, very rare times for any of us using that we don't have a place for our money to go. But imagine now if our money was in our bank, but over here we, I don't know, let's just say you got a real estate deal, or let's just say, we're going to just do a Bitcoin here. Bitcoin was a buying opportunity. You hear Spencer, you're like, oh my God, I want to buy Bitcoin. Or let's just say you're like, I want to beat inflation. I want to buy some of those tips. These are all just different investments. Okay, real estate, Bitcoin, Treasury, inflation protected securities, all great plays right now for the economy. What if you could take your money out of your bank and do any one of these? You're thinking, duh, I could do that at my bank. But what if your money never left your bank? So let's put a monetary value, 100K. You had 100K and it was earning, get rid of all this, 6%. Just keep the numbers simple. You're earning 6% on 100,000. If this was your bank, even if you are a preferred customer of the bank, if you took that 100K out to buy a house, Bitcoin, or Treasury inflation protected securities, how much money would their bank pay you? 0, because you took all the money out. Your bank, when you take the money out to buy the house, the Bitcoin, or the tips, how much do you still earn? All of it. 6%. The same amount you were earning in the beginning is the same amount you earn. Now, this seems like hocus pocus stuff. And this is where you probably run into problems. This is where Devin probably runs into problems talking to friends, or did in the beginning. This is where Steven would run into problems, because people are like, no way, that's too good to be true. That doesn't even make any bloody sense. How can you put 100 in, take 100 out, and still make 6% on 100? That doesn't make any sense. This is the difference between conceptual versus actual application. This bank is nothing other than a stupid whole life that is specially designed and engineered to do exactly what we do. And every single whole life or any life insurance plan you will ever hear about, and when you tell your family, oh, I put money into this whole life insurance, the first thing they hear is life insurance, death benefit, expensive. That's the first things they hear. And after that, they got that ringing in their ears and they don't want to hear anything else. That's it. But every one of those death benefit, or every one of those life insurance comes with a death benefit. The thing the average person does not understand is there's really, I don't think, a single mutually owned insurance company that will not allow you to access your death benefit while you're alive. Think about that. You took out a life insurance policy so that someday later, when you die, somebody gets a death benefit. Your legacy, you got to do it, got to be a good breadwinner, got to make sure your family's taken care of when you leave, the burial expenses, all that good stuff, the death benefit. But very few people understand that they can use their death benefit while they live. And they do that by taking loans from the insurance company. And the loan that you take from the insurance company, i.e. your bank, they'll never tell you no. They'll never even ask questions outside of, is this money laundering? Are you part of a divorce decree? There's 4 questions. And then the 5th question, I'm sorry, there's 5. Devin, do you know what the 5th question is that they ask you, the last question that they want to know when you take a loan from your policy?
Where do you want it deposited?
Yeah, where do you want it deposited? The insurance company just says, all right, where do you want the money? Oh, wait a second. You're not going to pull my credit? Nope. You're not going to ask me why I'm taking it out like my bank does every time I go to take a larger withdrawal. They want to know what I'm doing with the money that I gave them to hang on to. Nope, they're not going to ask you anything. Where do you want us to deposit it? Oh, I don't know. How about this account? No problem. And then just like Devin said in his talk, how long did it take you to take that money out?
A couple days. The cool thing is it's tax-free because it's a loan.
Yeah.
So if you start studying really wealthy people, what they do is they avoid taxes by leveraging assets. So let's say you've got a couple properties. You can get an equity line of credit, so you can leverage the equity to go use money, right? And it's tax-free because it's a loan. It's not considered income. That's really all you're doing with infinite banking. You're leveraging an asset because it is an asset. Whole life insurance is an asset that continues to grow. It'll never stop growing. So it's going to grow at least 3% every single year. You're just leveraging the equity in that asset. And all the equity is when you put money in. So let's say you put $100 in, that's your premium. A large portion of that premium goes to cash value, which is just an advance of the future death benefit. So you can leverage it all 100% tax-free. And that's how extremely wealthy people move money. They just leverage their assets to create more income on a tax-free basis.
I love it, dude. Like you just did it. But like, think about that. Like, you have the ability to take your money out of your bank without even taking your money out of the bank. Like, does that resonate? You get to use your money without taking your money, because you're not taking your money. The insurance company is just giving you their money that they have to pay out someday when you die. And because of that, you get to tap into what Albert Einstein called the 8th wonder of the world, the most powerful thing in the universe, and that is compound interest. But you get to add a word after compound interest that no one would even say in Wall Street because it's a swear word: uninterrupted. Uninterrupted. God forbid you call your broker to take a loan against your brokerage account and then you still want them to pay interest on it. I mean, if you're super wealthy, they'll do that with a margin, but in most cases, that's not going to work that way. So now we gotta answer the elephant in the room, because everybody's like, loan. Oh, that's a swear word. I don't want a loan. I don't want to owe the insurance company money. Great. What if I told you the loan never needs to be paid back? Is that better? It's kind of a lie, but what if I told you that? Would that make you feel better? And you'd be like, oh, yeah, I don't want to pay the loan back. Great. Well, you do have to pay it back, but here's the thing. You can just pay it back by dying. That's all. There's a couple certains in life: death and taxes. And We got Pat on here. We're going to hit taxes too, but those are two certains. And guess what's going to happen? You're going to pay both. You're going to pay taxes, and you're also going to pay the death. I don't know what you call it, but you're going to graduate. You're going to die. Nothing we can do about it. All of us are going to go there, including lazy cash is what it is. So the loan that you take is in advance of your death benefit. So the insurance company doesn't give two craps if you ever pay the loan back. Matter of fact, they'd prefer you not to, because they got to pay it out someday. So they're just going to subtract it from that someday number. And the whole time that you have a loan with the insurance company, now here's the bad part. They're going to charge you interest on that loan. That's right. Insurance companies are not nonprofits, and people get mad. Oh, those greedy insurance companies are always finding an angle. No, no, no. How about the greedy banks? Insurance companies are profit companies. They might be greedy in one way or the other, but you know what? They do this because they know how to make money. But you know, there's a simple word after this, and it's right in the word simple. It's called simple interest. You'd have to understand mathematics, and I know this is a complicated topic, but just look up the difference between compound interest and simple interest. And then write me a 3-paragraph thing explaining the difference and how it affects your life. It should affect your life because no matter what, even if I flip these numbers, even if your bank paid you 4, okay, let's say your bank paid you 4, and let's say the insurance company charged you 6. How many of you think that's a good deal? None of you, right? You're like, that's crap. I'm losing 2%. If I'm only making 4 and I'm paying 6, I'm losing 2. Wrong. Compound interest versus simple interest, you'd make money in time. We did the math on a 5-year loan, but that's not it. Actually, you're making a spread day 1 from 6 to 4, just like the bank does. The bank makes a spread on your money. You now get to make a spread because you own the bank. But see, we now know how to do exactly what the banks do. We know how to treat our money the way the banks do. We know how to live with our money in an environment that is tax-free, okay? Now, the next thing and the most important thing is not this stupid policy, which everybody wants to glorify and make the greatest thing on the world. Oh my God, I want one of those policies. No, 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 hold on. You know what you want? You want control of your money to buy real estate, Bitcoin, tips, or any investment that's in your wheelhouse. You want your money to go to work for you, making more money. You know how to make money once right now from somebody else's bank. You write a check and you invest it. Whatever that investment makes, that's you're making money once. I just showed you by changing just where your money goes first, how to make money twice. And you didn't have to work harder, longer, or take on any risk. All you did is just changed the dynamic of where your money started. Then whatever these make, the most important thing, and one of the things that kind of upsets us, if you make 10% over here, people's minds do something really sick. And they then take that 10% earnings that they make on the real estate, the Bitcoin, the tips, whatever investment you do, and they put it back in somebody else's bank. After they've already started their own bank, they literally put their money in someone else's bank because they just forgot. And that's okay, because this is where training comes from. This is where application comes from. It's not the policy. It's not what you've learned. It's the application. And the most important thing is, whatever you make here, if you own a bank and you took a loan from your bank, why would you ever steal from your bank? Put this money back in your bank. Okay, it's got to go somewhere. It can't just live in cyberspace. It's got to go somewhere. So put it back in your bank. And when you put it back in your bank, do it as a loan repayment. Because you know what? Now you've even fixed the game better in your favor, because now this 4% that you're paying to the insurance company, that greedy insurance company, you're paying 4% every month on a lower balance, because all you're doing is taking your earnings and putting it back in your bank. This is wild, folks. This is not complicated. It's not complicated at all. You just think like a bank. But see, here's the problem. When you make all this money over here, like we are and like Devin is, with moving our money and making it go to work, the problem with the infinite banking concept is Uncle Sam can't do anything over here in our policy because we're protected here. We, not even in the tax code. We're just kind of out of that realm. Like they're not going to tax the internal buildup if it's built right. But once we take our money out of our policy, those loans, and we invest it, whatever we make over here, Uncle Sam is salivating, waiting for you to file your 1040 tax return and pay the taxes, which is why it's very important for any event we do to have experts in our corner. People that know things you don't know, people that know how to teach you things that you'd never learn in your lifetime, and people that will show you how to protect, preserve, and build your wealth. Well, one of them is right here with us. Are you still on your yacht?
I still am.
There you go. So he's on his yacht, folks. So give him some credit. Like, hey, you know, some people got it a little rougher than you do. You know, I know you're in your house and he's on his yacht. Like, hey, cut him some slack. But he's pretty darn good when it comes to taxes. And he's going to be out here next week teaching all of you how not to pay as much in taxes legally and how to do some really cool things. So what I'm going to do here, I'm going to pin you up there so that you've got the stage and you can tell everybody a little bit about what they're going to learn next week.
Oh, that's great, Chris. How's everybody doing out there? I hope everybody's enjoying their summer and having a good time. I know we are. I'm over here in the beautiful Pacific Northwest on Puget Sound, and we've been out on the boat for about the last 3 weeks and stuff. So it's nice to be on the call and whatnot. It's kind of cool, Chris. We just got that Skylink wireless satellite system. And it works great. So I'm able to come out here on the boat and do this. And so we're having a good time. But anyway, besides all that, Chris is 100% right, folks. It's not how much money you make that counts. It's how much you keep. And the wealthy people, they've all figured this out, and they're able to hire, you know, high-powered tax attorneys and stuff like that. And what I'm going to do when I come out to Buffalo, I'm going to show you copies of my actual tax returns. And just to give you a little bit of an idea, I'm a former school teacher, and 20 some years ago, I was teaching school and, you know, was making my $1,500 a month or whatever it was, and decided I needed to do something a little bit different. And I ended up getting some rental properties. And I went to a seminar to learn how to invest money in the stock market. So I started investing in the stock market a little bit and just doing some different things, and ended up making some pretty good money with my investments. And so in 1998, I actually made about $250,000. I was 35 years old. And from making $1,500 a month as a school teacher to making about $250,000 a year through some different investments in real estate and stuff like that, all of a sudden I didn't have an income problem anymore. I had a tax problem. And sometimes it's not what you know, but who you know that can really, really make a difference in your life. And I had a unique opportunity to meet the former is the key word, the former senior trial attorney for the IRS. And I went to my CPA, made $250,000, 1998. I'm going to show you all this stuff next week in Buffalo. But I had my mom and dad CPA do my tax return for me, and paid about $62,000 in tax. And then I met the former senior trial attorney for the IRS. His name's Scott. Anyway, talked to Scott about what happened and everything that was going on. The very next year, made the same money, made about $250,000. But I did everything exactly how Scott taught me how to do it, how to categorize my expenses and capture these deductions and whatnot. And my taxes on $250,000 of income, folks, went from $62,000 down to $3,500, morally, legally, and ethically. And if you want to save money on your taxes, people always ask me, Pat, what's the number one thing of saving money on your taxes? It's not who your CPA is. It's not who your accountant is. It's not who your tax preparer are. As long as they're qualified, they have to be qualified, right? You need somebody who knows what they're doing, no question about it. But the key is, what information are you giving them? Because I didn't know this before, but it's a felony. It's against the law. It is illegal for your tax preparer to take any information that you provide to them and alter it or change it. They can't. And so all they do, it doesn't matter who you go to, they take the information that you provide, they have it inputted into the computer, they hit print, and it prints out your tax return. There's no more number 2 pencil and an eraser or any of that kind of stuff. None of that goes on anymore. So they just take the information that you provide, they input it in the computer, and it spits out your tax return. If you want to save money on your taxes, you need to know what information to give your tax preparer. And like I said, morally, legally, and ethically, because you need to follow the laws. You need to follow the tax code. You do not want to get involved in tax fraud, folks. That'll put you in jail, okay? The problem here is the tax code is 72,000 pages thick. Nobody understands it all. And it's so convoluted because it could say something over here in the tax code, and then 1,000 pages later, it contradicts what it just said. It's so messed up. It's unbelievable. It's so complicated. Nobody understands it all. So what Scott did is he broke it down to where a sixth grader could understand it. And he taught me, he said, Pat, here's how you categorize your expenses. Here's the system that you follow. Okay. You don't need to know how to fill out tax forms. You don't need to know any of that. What you need to become really, really good at is categorizing your expenses 365 days a year. So he taught me how to do that. And that's what I'm going to bring to you. And I'm going to show you guys how to categorize your expenses 365 days a year. Because every time you spend money, you're either capturing a tax deduction or you're not. And if you're not capturing a tax deduction, the national average is 30 cents on the dollar. So if you spend money and you're not deducting it, you're actually spending 30 cents on the dollar more than what you think, because it's 30% is the national average on what taxes are for non-tax deductible expenses. So how do we take these non-tax deductible expenses, convert them to tax deductible expenses morally, legally, and ethically? And that's what I'm going to be showing you guys and teaching you what to do. So there's so much. I could talk to you and show you for 8 hours probably, all these different little tax deductions, little tricks and little nuances that the IRS wants and what they need. But bottom line is, when I come to Buffalo, I'm going to be showing you copies of my tax returns. I'm going to be showing you the tax deductions. I'm going to be showing you how to implement those tax deductions in your life. And more important than all that kind of stuff, I'm going to show you how to become audit proof in the process. So, Chris, that's a little bit about what we're going to be sharing with everybody next week in Buffalo. And we're really excited to come out there and talk. And it's going to be awesome.
Well, Pat, we're pumped to have you out too. And that word audit proof just rings the bell. I love it.
Yeah, that's the whole key. Teaching people these strategies, you have to do it the right way. Scott, being the former senior trial attorney for the IRS, he's a stickler on doing things the right way, no question about it. And so am I. This is not, we're not going to teach people how to cheat the IRS or do things unethical. No, not one single bit. Every single strategy we have, everything we do is 100% based on the tax code. You have to remember also, Chris, and most people don't realize this, the IRS, they're just like the state patrol out there that points the radar gun at you as you're going down the interstate, right? They didn't set the speed limit. They just enforce it. So who sets all the tax laws? Congress, those people we elect. And here's the key to Congress right here, folks. Congress will never pass a law that hurts themselves. They're a little bit of this self-serving group, right? I say that tongue in cheek a little bit, but Congress will never pass a law that hurts themselves. In fact, just to give you a little insight here, they passed a law a few years ago that says if you drive a vehicle that weighs over 6,000 pounds, like a Cadillac Escalade, or some of these new luxury SUVs, or some of these new real nice luxury four-wheel drive, four-door pickup trucks, or Cadillac Escalade, or any of these gas guzzler type vehicles. Right now, today, if you purchase one of these, there's a way that you can deduct the entire amount of that vehicle this year on your taxes. Nobody knows about this. I mean, there's so many little things that you can do. So if somebody's going to have $80,000 taxable income coming up this year, and they go out and they buy a new vehicle for $80,000, and they could borrow money from the bank, they could borrow money from their life insurance policy, like what you're talking about with the Infinity program and stuff. They could borrow money from wherever, or they could pay cash for it. It doesn't make any difference. They could finance it. It doesn't matter. The entire purchase price of the vehicle becomes tax deductible this year. And so if you buy an $80,000 vehicle and you had $80,000 of taxable income, what does that do? It makes your taxable income zero. Taxes due, zero. Why? Because you're following the laws that Congress passed, and Congress will never pass a law that hurts himself. That's just one of the things we're going to talk about. We have tons of stuff we're going to share, Chris. That's just one of them, just real quick.
I love it. And, you know, just to kind of have some fun with this, I'm trying to find it. I got to play a quick video for everybody after this commercial. This should hopefully bring it home if it works. They weigh over 6,000 pounds. Just saying.
Just saying. Oh, good. That's great.
Oh, yeah. Well, hey, man, we're excited to have you out here. And I know everybody that's going to be in attendance for a sold out in-person event outside of 2 VIP tickets we have and lots of virtual tickets that we're hopefully going to blow out of the water this week. It's going to be a wild time and we're going to have a lot of fun. So look forward to seeing you out here. If you're taking the yacht, you better get going, man. It might take you a little while. Just saying.
Yeah. And we're going to come down through the Panama Canal and up around, you know.
There you go. So, all right. Well, I'm going to let you push off so you can make sure that you make it here on time. There might be an odd storm or two. So we'll see you next. We'll see you out here.
That was great, Chris. I appreciate it. Look forward to seeing everybody next week. Take care, you guys.
Absolutely. Thank
Bye.
you.
Hey, you know, I love it. That's great. Out on the boat like that. That's awesome.
Yeah. His
Might
internet.
have to do that. I'm gonna have to do that next week myself.
Man, that internet connection was freaking awesome. Yeah, no, I'm very excited about that. This will be the first time we're having Pat out. It was referred to us from somebody we trust and said he's just one of the best. So very excited in it. And it's a totally different way. Like you said, you know, where this knowledge came from is exactly where you want the knowledge to come from. The people that actually were on the inside and actually know the laws and know you're not beating them. You're not, well, you're beating the laws, but you're not breaking them doing this. These are part of the tax code. And you'd be just fine if you all want to sit down and read 72,000 pages. As soon as he said that, you saw my lazy cash jumped right off the desk and said, I'm out. He wanted nothing to do with 72,000 pages of IRS mumbo jumbo. So, Stephen, I wanted to just kind of turn this over to you for a quick second. I want you to kind of just talk a little bit about some of the things that, you know, have happened to you. You're doing so many things. You're doing a whole bunch of shows on precious metal. You're doing shows on, you know, infinite banking and everything else. So like, how has all this changed your life?
You know, next weekend in Buffalo, I'll definitely be talking more about that. I look forward to hanging out with everybody at the event. You know, I'll be running the virtual side of things. So anybody that's buying the virtual tickets right now, we're going to be doing some really cool stuff where afterwards we bring the speakers over with me and we do some interviews with them just for the virtual crowd. And so we'll be able to answer your questions and you guys will still be able to interact with them even virtually. Of course, it won't be the same as being there in person. So next time, get there in person because it's hard to beat that energy in the room. But luckily we do have options like virtual now. And if you can't make any of the days or you got to miss some of it, we do record the entire thing as well. So everyone that buys a ticket virtually or in person, I believe will be getting those recordings. So you can always refer back to them or catch up on the parts that you missed and things like that. But for me, I mean, you know, I was a person, you know, a financial advisor with Ameriprise Financial out of college. So I started my, you know, financial life first off knowing nothing about the stock market or money when I first started studying to become a financial advisor. And I came from a little small town in the middle of nowhere and in Virginia and Southwest Virginia, where things like money and investing were never spoken about. Like, you know, that was like kind of a no-no to even bring up things like money or how much people made or what people did for a living and investing and stuff like that. So it was a huge swing. So I started to learn about just investing. I really like people. And then, you know, I was invited to a real estate seminar where I went and listened to a speaker talk about real estate investing. But more importantly, that speaker was talking about entrepreneurship. So a lot of the things that we now teach at like the Money School Essentials training next week, and like Pat was talking about how you can say, you know, little things you can do in your life to save tons of money on taxes, for example, or little changes you can make, like where your money goes first with infinite banking and privatized banking, where you don't work any harder, you don't work any longer, and you don't take on any more risk, but you're able to drastically change your financial situation moving forward just by making that one change, where the money goes first. So for me, these different strategies are huge, because one of the reasons as a financial advisor why I did not like doing what I was doing was because I would meet with clients And it was always the same conversation over and over and over again. Tell me about your goals and tell me about your dreams and tell me what retirement looks like for you. And everybody has a beautiful vision of retirement. They all want to say, I would love to be able to travel, or I'd like to be able to get an RV and go around the world, around the country, or, visit my kids and grandkids on the other side of the world, or whatever. Everybody wants to go to the beach or be able to go on cruises, or, just not work, And unfortunately, because of how this country operates, put all your money in a 401k, rely on pensions and Social Security, and just the way that, why 95% of people aren't able to retire in that lifestyle. But I learned that firsthand by having those conversations with clients. So then after they told me about all these big, beautiful hopes and dreams, and they were on a high because they're thinking about it, then my job ended up being like, let me take you back down to reality. Because what you're doing right now, there's no way in hell you're ever going to be able to do that in retirement. So it was always either the conversation of, okay, well, you want to be able to do this at 62 years old. Well, going at the pace you're going at now, if everything works out right, you're still not going to be able to do it till at least 67. So we're pushing back retirement. Or, hey, you want to stay on track for 62? Well, then you're going to have to drastically change the way that you live now. So instead of having, 2 cars and going on vacations and going out to eat and having the lifestyle that you have now, you're going to have to cut all that back, because you're going to need to save more money to be able to invest more and hope that you have more for later on. Or if you don't want to do that, then we're going to have to get a lot more risky with your investments, because the only way to make better returns, to put you in a better position in the future, you're going to have to take on more risk now to be able to get more rewards later on. So it was always those conversations of kind of bringing them back down to reality. And then once I learned about real estate investing and entrepreneurship and controlling your financial future, controlling your money, and following these strategies, things that we teach every day these days, this was all new to me back then. But once I started following that myself, it started opening up my eyes to what's possible in this country. When you learn about alternative investments, you learn what the wealthy do. People like Robert Kiyosaki, people like Tony Robbins, these people that we all see all the time for years now. And so once I started doing it myself, I started thinking back to being a financial advisor. Well, if I was advising people traditionally, why can't I also share with them what actually does work in the real world? Does that make sense? So then I had an opportunity in my mid-20s to start traveling the country and teaching real estate investing and how to get started in real estate investing. And Chris, that one of my favorite quotes that you have ever said, and I talk about it all the time, is on the screen right here. So it's never about your actual resources. It's about how resourceful you can be. And that right there, I could talk about that for hours, because that is everything right there. Because it doesn't matter where you're starting financially right now. It doesn't matter if you have millions in the bank. It doesn't matter if you have nothing in the bank right now. That none of that matters. It's where you're going and it's how you're going to get there. And what we teach, and there's different techniques for everybody. If you have no money, you're going to get into real estate, maybe with wholesaling. If you have millions, maybe you're going to get into real estate through passive investing. But you're going to use real estate as a big part, because real estate is such a safe way to invest. Our money is protected by hard assets. We take advantage of not only appreciation, but also income coming on a regular basis. So there's so many advantages. So when you start putting all this together, and I had that opportunity to go start training, I really learned in my life in my early 20s that I love people. Because at the end of the day, real estate and money really is people, because that's what it affects, right? Money is just a means of exchange to get what you want to get. But what is that exchange? What is it that you want to get? And that boils down to you, the person. And so for me, I kind of started thinking back on, why did I become a financial advisor in the first place? Why was I drawn to going and working with students and clients and teaching them real estate and speaking on stages and meeting with them one-on-one and traveling all over the country. And it ended up becoming people. I love people. I love helping people. I love seeing them succeed. Like when somebody on here, sends us the testimonials or they put something simple in the chat box, like that makes my day. Like that's the stuff that drives me to wake up every day and do what I do. So, it's been a long road. I've had a lot of failures. Devin talked about it. He worked lots of different jobs until he finally found the right track. back. I mean, through my entrepreneurial career, I've had to go back and get W-2 jobs a handful of times. Why did I do that? Because that's what I needed to do to get to my goal, which was to ultimately, do everything for myself, because you do run into hard times sometimes. So what I've done is I've just taken a culmination of all of that I've done in my life and just put it all together, where now we can teach these strategies, Chris, like we do, where it doesn't matter where you're starting from, but we have strategies that you can follow to get you to where you want to be. And when you have somebody like Chris, like Devin, like myself, like our entire team that's willing to take you by the hand and show you step by step exactly how to do that, well, everything changes in your life. And it all starts with the Money School Essentials training that we teach, because these policies are great. These insurance policies that we do, becoming your own bank and starting these privatized banking, that's all great and dandy. But if you notice what Devin said earlier, if he has to leave his money sitting in that account, he will, but he doesn't want to. He wants to keep that money moving at all times. Chris, I know that's one of your biggest things in life, is keeping your money going at all times, because keeping that money moving is how you're going to, because what I found over the last 14 years, it really boils down to two things. Two things are what create success. After you have the right mindset, after you have the right education. But let me just put these two things on the screen, because these two things right here, if you can figure out how to do these two things, you will have tons and tons and tons of success. So these two things are plain and simple right here. This is how the Millionaire is created. Number one, compounding interest. So Einstein said this best. Einstein said the eighth wonder of the world. Compounding interest is the eighth wonder of the world. Those who understand it, use it. Those who don't, pay it. And then what we do with these policies is these create uninterrupted, guaranteed, tax-free compounding returns on our money every year for the rest of our lives until we die. And then at that point, all that money goes to our family. So we create that legacy. So that's very, very important right there. Number two, money movement. Money sitting still is losing, and money in motion is making more money. So we work very, very, very hard to get these dollars in the first place. So once I get these dollars, I want to be as smart as I can to keep more of these dollars in my life and keep these dollars making more dollars for me at all times. And this is exactly what we do. We take advantage of laws that are on the books in this country. So for example, with retirement accounts, okay, maybe you have an old 401k that's in a tax deferred account. Well, let's talk about the right strategy. Let's take advantage of these tax deferred and tax-free laws that are on the books through retirement accounts, but let's control that money. Or if it's non-qualified money, like just cash that we're making everyday paychecks, well, let's put it into our own bank where we're making these uninterrupted guaranteed returns instead of the bank making 400 to 1,600% returns off every dollar that we park at that bank and us getting 0.01%. So let's be smart about the dollars that we make. And then once we're smart and keep more of those dollars, the tax strategies that Pat's keeping allow us to keep more of those dollars in our life. But once we keep more of those dollars, now let's be very smart about what those dollars are doing. And to me, dollars making more dollars and dollars staying in my financial life through uninterrupted compounding interest, even simultaneously while I'm using those dollars to make more dollars, that stuff just makes sense to me. Is everybody okay with that right there? Because to me, that just is common sense. And you guys that follow us on like What the F Happened podcast, like I'm not a technical guy. Like I don't read charts. I don't look at the little ups and downs and the green little candles and all that crap. To me, it's common sense. Like just to me, that's common sense right there. So hopefully you guys are okay with that, but that's what this training is all about. That's what Money School is all about. That's what the Money Multiplier is all about. And if you guys like that, then to me, you're definitely in the right place. So Chris, I know that was kind of a lot right there, but just wanted to go on a little rant because I love this stuff.
Oh, I thought it was great. I'm sure Shauna and Devin and the entire team would agree that that was epic right there. You know, it just sort of brings the whole thing full circle. And folks, I know we're wrapping up and at the end here, but you know, we're really hopeful that we're going to see some of you and meet some of you in person out here in Buffalo. But we do understand it's summertime. You're vacationing. You got better shit to do than fly to Buffalo, even though it's beautiful here, and hang out with these awesome, sexy dudes. But I get it. So the best part about that is you don't have to come out here. You don't have to get a plane ticket. You can just join us virtually. It's going to be a whole thing. We're not doing a normal virtual like we've seen us do it before. This is going to be like you're here because Steven's going to be moderating an entire virtual program while the live program's going on. You're going to get your questions answered. You're going to be part of the event. You're not going to just be a number on a screen. So just get ready for that. This is going to be impactful, and the virtual tickets are what are available outside of the 2 VIPs. So grab those. Oh, you got a wedding. No problem. You got a graduation party. I know you got something because I sent out messages to, I don't know, at least 50 of my people here in Buffalo that I know. And all 47 of them out of 50, just by the numbers, had something going on. Now, maybe they were lying to me. It is Buffalo, but maybe they really are. So if you can't be here next week, even virtually, we send you the recording. And that will be worth every penny. You spend more money on just about anything in your life than you would spend on the ticket here. And don't make the excuse that you have something better or something pre-planned or something else to do. It's not an excuse on the virtual. It's recorded and it's edited and it's then sent to you so you can watch the things that are most relevant for your needs and your goals. Because a lot of people don't do the virtuals because they're like, I'm not going to have time to go back and watch 2 days of footage. Then don't. Maybe you just need one thing. Maybe you just need Pat's tax advice. Great. That section, just watch that. Worth every penny. If at the end of the year you didn't have to pay taxes on $80,000 of your income, would that be worth $197? If you found the Brent Kessler's talk on the infinite banking concept allowed you to make money twice instead of once, would that be worth $197? Listening to Devin's story and how he did what he's done in 2 years, would that be worth $197? Listening to Greg Hurling, who is a multi-millionaire, tell you how to take your retirement funds and put them back in your control, would that be worth $197? I think you get the point. It's $197 that you're not going to miss, but it's a lifetime of financial freedom that you could miss if you don't spend the money and participate. So folks, with that being said, I want to thank all of you for joining us today. We thank you every single week for joining us. We know it's summer. These are the good times. We are calling this revenge summer because you are getting revenge for the prior 2 summers of having to deal with the bastard called COVID. So I know you're getting revenge. Get it. But remember, this summer, the summer of 2022 resembles 1929 summer a lot. And if you know anything about what I just said there, that should scare the living tar out of you. Because what followed that awesome killer summer in 1929 where everybody was employed, everybody had money, the stock market was going up and down, but you were optimistic. And then what happened? Imagine if you predicted that. What would your life look like? Well, that's where you're at. So I hope to see you out here in Buffalo, or I hope to see you on the virtual. With that being said, Devin, Stephen, anything you want to say closing out?
I can't wait to see you guys next week.
Thank you all. We'll see you soon. All right, so I hope you guys enjoyed that episode. We're putting up tons of them, but I think if you like this one, you'll probably like that video as well. Not only that, I've got a book that I created, Mapping Out the Millionaire Mystery, where we actually show you what the wealthy do in the game they play with money. I want you to have that for free. And if you want to know about all my new videos coming up, click that alert button. Actually, smash that alert button, and you'll be notified every time we put a new video. So we'll see you on the next episode.